Happy Super Bowl Sunday, everybody! So while you're getting the wings and snacks ready for the huge showdown between the Bills and the Vikings, well, the financial markets just had their own brutal championship game. And we are going to break down that shocking final score right now.
Would you look at that? $121.64. Just a few days ago, on January 29th, that was the all-time high price for a single ounce of silver. It was an absolutely stunning parabolic peak that had the entire market just buzzing. And then, this happened. In less than 30 hours, boom, over a third of its value completely wiped out. We're talking one of the most violent crashes in the history of precious metals, and it left traders and investors just totally stunned.
That's the billion-dollar question, right? So before Josh Allen and the Bills take the field, we are going to unravel this whole mystery. Let's get into the game tape of what was a truly wild month in the markets.
Okay, so let's rewind the tape a little bit. January 2026 was, and I mean this without a doubt, the most violent month for precious metals since way back in 1980, when the Hunt brothers famously tried to corner the silver market. It was that crazy.
All right, so here's the scoreboard as of this morning. You can see gold is still holding the line. It's near $5,000 an ounce. And silver, it's hanging in there around 78. But look at those year-to-date numbers. Even after that absolute beatdown we just saw, gold is still up almost 15% and silver is up over 11% for the year. So yeah, the bull market is definitely wounded for sure, but it is far from dead. This timeline, it really tells the whole story, doesn't it? The month started hot, just building on a massive 2025. By the middle of January, bam, new all-time high in silver. Then, from the 27th to the 29th, it just went vertical, a classic blow-off top. But on January 30th, the whole game changed. The Warsh Shock hit, and that led to a historic crash and then a week of just pure, chaotic consolidation.
So what was that game-changing play? Well, it all came down to a surprise announcement that completely flipped the market's playbook upside down. It was like swapping out your star quarterback right in the middle of a game-winning drive.
And here is the new QB, Kevin Warsh. The second Trump announced him as the nominee for Fed chair, the market just saw a total regime change. See, Warsh is a very well-known hard money hawk. That means he favors a stronger dollar, less money printing. This is a guy who literally resigned from the Fed back in 2011 just to protest its easy money policies like quantitative easing.
Now, this slide right here really lays out the night and day difference in strategy. For years, the market has been thriving on something called the debasement trade, which is basically a bet that the Fed will keep printing tons of money, making the dollar weaker and sending assets like gold and silver through the roof. Warsh's playbook is the exact opposite. Hard money, strong dollar. His nomination was a direct torpedo into the very logic that was fueling this whole metals rally.
Okay, so let's zoom in on the star player of this whole saga, silver. I mean, no other asset went on such a biblical rise and then a catastrophic fall. It was the MVP and the biggest loser, all in the same week. It's unbelievable. So how did this even happen? Well, it was a perfect storm. The worst news caused the dollar to surge, right? That triggered all the computer algorithms to start selling silver. Then, to make things even worse, the exchange jacked up the margin requirements, which basically means they demanded more cash up front from traders, right in the middle of the crash. This forced anyone with a leveraged long position to sell immediately, to avoid getting wiped out. It just created this massive waterfall of selling. Just look at that volume on the silver ETF, SLV. It was trading more than Apple and Amazon combined. It was just pure chaos in the paper markets.
And here's where it gets really interesting. While the paper market was absolutely imploding, the physical market, it didn't even flinch. The demand for actual physical silver that you can hold in your hand still massively outstrips what's being mined by about 500 million ounces a year. This is the 5th year in a row we've had a deficit like this, and a lot of it is driven by huge demand for things like solar panels.
So after taking a hit like that, what's the game plan from here? Let's take a look at the scouting report and see what the possible scenarios are for the rest of the season.
So analysts are basically mapping out 4 main possibilities. The most likely, with a 45% chance, is a period of consolidation, a sideways grind while the market just kind of digests this shock. But there's a pretty good 30% chance the bull market just reasserts itself, and even a 15% chance of what they're calling the Oliver scenario, which would see silver go to some truly astronomical heights later this year. The bear case, a deeper crash, well, that's seen as the least likely at only 10%.
All right, before we all settle in for kickoff and that Bad Bunny halftime show, let's wrap this thing up with the most important analysis of the entire day, the pick for tonight's big game.
The source report is leaning towards Buffalo to cover the 4.5-point spread. So, why? Well, we just saw how a powerful offense can get shut down totally unexpectedly. But tonight, the data seems to favor the Bills' high-flying attack to get the job done against that Vikings defense.
But we're going to end on this timeless quote from John Maynard Keynes. Whether you're betting on silver or you're betting on the Super Bowl, it's a really crucial reminder that markets, well, they have a mind of their own, and things can get way wilder than any of us ever expect. Enjoy the game, everyone.